In this video, we're exploring the mindset and method of Phil Goedeker, a professional trader recognized for his uncompromising rule-based approach and ability to stay calm under market pressure. Through years of experience, Goedeker has built a trading style defined by disciplined risk management, patience, and the restraint to wait for only the highest probability setups, the kind that combine conviction with a strong reward-to-risk profile. We've selected 7 of his most powerful lessons from the ComLucro archive, covering discipline, avoiding career-ending losses, recognizing the trades worth taking, and making the mental shifts that separate profitable traders from the rest. Our roadmap is straightforward. We'll start with the core principles that shape his decisions, move into real-world examples from his own trading, and close with a 7-step framework you can apply directly to your process. And it begins with a truth that could save your trading career before it's too late.
You know, when I was young, I grew up in a fairly strict house, always knowing right from wrong, and for the most part, always been able to decipher what I should or should not be doing. And now that I'm a parent, I realize that having and enforcing a set of rules is an extremely important part to an orderly and functional household. And any trader that wants to make it for the long haul must also have a strict set of rules and make sure we stick to them. Because at the end of the day, what good are rules, even if we break them maybe 2 to 3 times a year? You know, there's nothing worse to me personally than taking a loss in the market that can wipe out weeks or maybe even months of trading. You feel like the last several weeks or months got simply flushed down the toilet. You know, you spend day in, day out grinding out wins, grinding out trades, only to have everything, be wiped out. It can be mentally demoralizing and very hard to get your mind back on reset. You know, it's the financial part of the loss that hurts the most, but the mental and emotional part can be just as bad, because if you're not trading with a free and clear mind, you may as well go home.
The foundation of long-term trading success isn't about chasing wins. It's about building and protecting a rule set that you never compromise. One catastrophic mistake can undo months of progress, not just financially, but mentally. A trader without a clear, unemotional mind is already beaten before the next trade. So how do you stay accountable when you're your own boss? In the next clip, Phil Goedeker explains the mindset shift that keeps traders disciplined even without external oversight.
You know, one of the great benefits of being a trader is that we're our own boss. We work from home, and for the most part, we answer to nobody. It's really everybody's dream job. But, on the flip side, there's nobody there to hold us accountable. So let's say we all were to work for a company. It doesn't matter whether it's big or small. And 2 to 3 times a year, we bend the rules. Or 2 to 3 times a year, we just make that same mistake over and over again. And we cost this company tens of thousands or possibly hundreds of thousands of dollars. What would that company say to you? Most likely you'd be out of a job. That's why it's so important, as self-employed individuals, traders, we hold ourselves accountable for our actions. Now, as a trader, I realize the most important thing I can do on a daily basis is preserve my capital. Taking excessive risk, taking on marginal trades, or adding to losing trades is an easy way for losses to add up.
Discipline doesn't just come from having rules. It comes from holding yourself to them every single day, even when no one is watching. Without accountability, bad habits grow unchecked, and small lapses can snowball into major capital losses. The true professional treats their own trading account as if they were managing a firm's money, with zero tolerance for recklessness. So how do you identify and eliminate the habits that quietly drain your account? In the next clip, Phil Goedeker shares why studying your losses may be the most valuable exercise in becoming a consistently profitable trader.
Sometimes as traders, we're always focusing on the next big setup. How much are we going to make on VERI? How much are we going to make on this? How much did I make last week or last month? But how often we focus on what we're doing poorly? How often we focus on our losses? I think our losses can be a great tool to help us create some rules. I think our losses, can help us study and say, hey, this is what I don't want to do again. This is what I don't want to do in the future. The thing about trading, it's a very tough profession. I think the stats are something like 90 to 95% of traders fail. And why do they fail? They don't fail because of a lack of winning setups or lack of wins. They fail because of their losses. They fail because they just take too many losses too frequently, or just that one big loss. I mean, that's the thing in the market. One loss can wipe you out and end your career. That's where a good set of rules can either make you or break you for the long haul.
Losses aren't just setbacks. They're lessons written in real money. The traders who last are the ones who dissect their mistakes, adjust their approach, and never let a single loss spiral out of control. A bulletproof rule set isn't built on theory, it's built on scars and corrections. But knowing what not to do is only half of the equation. In the next clip, Phil Goedeker shares why the patience to wait for the right setup is just as important as the discipline to cut a loss.
Now, trading can be a difficult profession. For that, we sit in front of our computers all day long, and we feel unproductive if we're not always in a trade or pushing buttons. You know, we follow traders on Twitter who tweet a new idea or ticker every 35 seconds, and we say, hey, that guy trades 80 to 90 tickers a day. I need to do the same thing. No, I think that's BS. I think you should not do the same thing. I think you need to stick with your high probability setups, the setups you know you're going to be profitable on, I'd say at least 75, 80, hopefully 90% of the time. Now, sometimes it can be hard to sit on your hands and be patient and wait for those setups, but why chase subpar setups? You know, why chase boredom trades? Why put good money after bad?
Patience isn't passive. It's an active choice to protect your capital until the market gives you the odds you want. The temptation to trade out of boredom is one of the fastest ways to turn small mistakes into big losses. By focusing only on high probability setups, you give yourself the best chance to stay consistent and avoid the emotional drain of chasing weak trades. But even with patience, there's another trap that can destroy months of hard work, adding to losing positions. In the next clip, Phil Goedeker breaks down why this habit is so dangerous and how cutting losses quickly can preserve both your capital and your mindset.
Now, how many of us here of traders have followed a chat room, a Twitter, or a friend into an idea that we knew was not a high probability setup for our own trading style? Now, we all have different trading styles here. What works for you may not work for me. Personally, I'm a terrible long bias trader. If and when I ever do go long, I take profits extremely fast, knowing that a lot of times profits can just get away from me pretty quick. I don't have the patience nor the conviction, to hold them. That's why month after month, year after year, I personally get more strict about the trades that I place. I probably place half the amount of trades I did maybe just 5 years ago, but I make way more money. Why? Because I trade the high probability setups that I know I'm going to be profitable 80 to 90% of the time. I like to use size with those trades, and I have very strict rules when it comes to cutting losses.
Consistency isn't about trading more, it's about trading better. By cutting out low probability setups and focusing size on the trades that truly fit your edge, you not only improve your win rate, but also reduce the emotional swings that come from constant, unfocused activity. Strict rules for cutting losses keep small setbacks from turning into career-threatening blows. But discipline doesn't stop at trade selection. It's equally critical in execution. In the next clip, Phil Goedeker explains why having clear exit rules and sticking to them can save you from the kind of stubborn mistakes that wipe out entire months of profits.
Stops are a must. We all have to use stops. Now, I personally rarely use hard stops, but I have mental stops on every position that I take. Basically, if something's breaking support or resistance, I usually just exit that trade. And I think most of us here need to have a mental idea in our head of where we're going to exit a trade, based on where it goes against us. How many of us here have ever been in a losing trade and we're down something small, maybe $5,000, and we think, I'm not going to cut it. I feel like this is going to be a winner, and we add to that trade. An hour later, we're down $20,000 to $30,000, and we think, wow, it's hard to, I can't cut it now. We hold it till the afternoon. Maybe tomorrow it gaps up, we're down $70,000, $80,000, $100,000, and we think, what the heck just happened? I could have cut that loss yesterday for $3, $4, $5 grand. Now I've given up 10, maybe 20% of my year just by being stubborn. Think about how much more money we could make at the end of the year if we just stick to some simple rules and cut our losses at an appropriate place.
Cutting a loss early is not weakness. It's the mark of a trader who understands survival. The bigger the loss you allow, the more it drains not only your account, but also your mental capital, making it harder to execute the next opportunity with clarity. Sticking to predefined exit points removes hesitation and stops stubbornness from turning into disaster. But the damage isn't always just about the size of the loss. Sometimes it's about refusing to admit you're wrong. In the next clip, Phil Goedeker talks about the mindset traps that make traders hold on to losing trades and how self-awareness can break that cycle.
Now let's talk about being stubborn for a minute. Why is it that we refuse to cut losses? Is it that sometimes we refuse to be wrong? Or has the research we've done on any particular stock made us so overly biased that we think the market is wrong and we are right? Or did we possibly take on too much size overnight On a low float stock that's opened dramatically against us, there's numerous reasons we take losses in the market. I think at the end of the day, our losses are they're basically our fault. I mean, sure, there can be unexpected news or events, but at the end of the day, I think it's our stubbornness that leads to some of our biggest losses.
Stubbornness may feel like conviction in the moment, but in trading, it's often just a refusal to accept reality. The faster you can recognize when you're wrong and act on it, the more you protect both your capital and your confidence. For Phil Goedeker, it's not about being right. It's about staying in the game long enough for your edge to work. So now that you've seen how Phil approaches trading with strict rules, patience, and an unshakable focus on protecting capital, here's a 7-step framework built from his own lessons. Step 1. Create and commit to a strict rule set. Rules are your first line of defense against emotional decisions. Treat them as non-negotiable. Step 2. Hold yourself accountable. When you're your own boss, you must act as both trader and risk manager, enforcing discipline daily. Step 3. Learn from your losses. Every loss is data. Study it, find the pattern, and adjust before it repeats. Step 4. Wait for high probability setups. Patience filters out the noise and keeps you focused on trades worth taking. Step 5. Avoid low-quality trades and overtrading. Doing less, but better, keeps your capital and mental energy intact. Step 6. Cut losses early. Every big loss starts as a small one. Stop it there, and you stay in control. And finally, Step 7. Eliminate stubbornness. The market doesn't care about your opinion. Admit when you're wrong and move on fast. So, if you're serious about sharpening your discipline and protecting your edge, the Psychology of Trading playlist is your next step. It features insights from David Paul, Tom Hugard, Alexander Elder, and many other world-class traders, all revealing the habits and mindsets that keep them profitable. Because in trading, protecting your capital isn't just part of the job, it is the job. I hope you enjoyed today's video. If you found the content helpful or engaging, please give it a like, as this helps the video reach more traders like you. And don't forget to subscribe to the channel and turn on notifications so you never miss our latest insights on the markets and practical trading strategies. Sharing this video with your friends or on your social networks can make a big difference and helps our community become stronger. Now, if you want to go even deeper and get access to exclusive content, early video releases, and extra tools to support your journey, consider becoming a member of the ComLucro Trader community right here on YouTube. It's a way to support our work and a smart investment in your own development. Thanks for watching, and I'll see you in the next video.